What's going on, guys? Thank you guys for checking in. I wanted to talk about the CPI, the Consumer Price Index. That data came out today, and it came out hotter than expected. It was an increase of 0.4% from last month, and the expected data, or the expected CPI, was expected to be 0.3%. So it came out a little bit hotter than expected. And when that happened, the market, overall market, it tanked. But the market did turn around for the day as far as the indexes. The Dow Jones, the NASDAQ, the S&P 500, all of them turned negative or turned in the red when that CPI data came out. But seems like the traders and investors, or the traders, digested that data, and seems like the overall market turned around. So it seems like maybe what's going on is that they think that we are coming closer to peak inflation, meaning they're thinking with all the rate hikes that we've been having overall over the past couple months from the Federal Reserve, traders are probably thinking that we might be coming to peak inflation, to where we will stop having these overall increases, and it should be going down hopefully pretty soon. So we will see. And one thing this does, as far as this high CPI data, you would have thought by all these rate hikes that the Federal Reserve has been doing over the past months, that you would think it'd be ticking down some, but it still hasn't. But this is going to give Jerome Powell and the Federal Reserve more ammo to be able to keep on going with the rate hikes, and to try to get this inflation going down, and which could lead us into a recession. You heard the comments earlier with in the week last week with Jamie Dimon. He predicted that it's going to be very bad. Essentially, it's going to be a very bad recession. And also other prominent CEOs have stated the same thing, as far, it could be very bad, and that then in the next months. And some people already think we are in a recession, and some people think it's going to be in the next few months or so. But the general consensus of most CEOs and most hedge fund managers is that it's going to be bad. It's going to be something to deal with. So it's going to be something to prepare for, and something to get yourself together for, because with these with the Federal Reserve rate hikes, what they've been doing since they've been going so hard over the past couple months, a lot of people think that the Federal Reserve was late to the party, meaning they should have already been trying to slow down inflation, instead of saying it was transitory, or meaning temporary. They should have been trying to stop inflation. But since they've been going so hard over the past months with these 75-point rate hikes, a lot of people think that's going to kind of just go full throttle, basically cause the U.S. economy to go full throttle into a recession. So, as far as those federal rate hikes, and as far as recession, the best thing to do is basically, come up with a game plan. Write down your game plan of what you want to accomplish during a recession, and how you plan on protecting you and your assets and your family during a recession. Because recession doesn't have to mean that you have to accept, bad economics. Meaning you don't have to accept not having any money, or not having assets or resources. Recessions are times where people get rich. There are times where people get money. And because think about it, in a recession, everyone is not struggling. It's always someone who is getting richer, and someone who's gaining more money. So don't look at it as if in a recession, everyone struggles. That's not true. More millionaires, as for example, during the 2020 recession that we had, a lot of millionaires or new millionaires were made during the recession. because they had a game plan. They knew what they want to do as far as what assets they wanted on sale. Because during the recession, everything was on sale. With businesses slowing down, with layoffs and things of that nature, and the slow activity, things are on sale. Stocks are on sale. Real estate is on sale. People are on sale. Everything is on sale. So you have to look at it as far as everything is in the red and see what I can do, see what you can do in order to establish wealth and in order to build your net worth. So definitely we are probably going to head into a recession. And as far as the stock market will probably continue to be very volatile because we have so much data, so much going on in the world. You have a possible recession in the U.S. We have a possible global recession with Europe and other countries. We have the war going on right now. We have inflation. We have rising interest rates. We have just a lot going on right now. So you can expect the volatility to keep going in the stock market. And as far as investing, it's hard to say what's going to be a bottom. But this environment is definitely a trader's environment, meaning you can make money going up, you can make money going down. As far as for buying for the long term right now, I think we still have some more downside. So you need to really calculate your price points and what companies that you're looking at and what price targets that you're looking for, and then see what you want on sale. But I think definitely we're going to have more downside. And most estimates think we're going to have at least 20% more downside to the bottom. So definitely come up with a game plan. Don't just come out here, just buying anything, doing anything. Come up with a game plan on what assets you want and what business you want to create. What things you want to do in order to get yourself established. So I just wanted to talk about that and share that. And in the comments, give me some comments on what you're thinking about. And let me know what you think about what's going on as far as the stock market and also as far as a possible recession. So I'm Rico. Make sure to subscribe to the channel, hit that like button, and we will talk soon. Peace.